This video addresses whether you should refix in advance before your fixed rate expires, which I call the mortgage cliff. Let's go to the drawing board. So 7 out of 10 people who book a call through my bio and we speak for 15 minutes, we talk about their magical school bus. Basically, they have a home loan that's fixed at 1.99% or 2.35% or etc. about 2 to 3 years ago, and they're heading towards this mortgage cliff, which I call them MC, and we're in like February right now, right? And we're speaking, and they're talking about their fixed rate that's got to expire in June, August 2023. Now, mind you, I didn't create this term mortgage cliff, MC. It's actually been all over the news, tabloids, Channel 7, Channel 10, the whole doom and gloom media. And what they're talking about is, fixed rates are gonna end soon. So around this period, we're expecting very, very high rates waiting for these homeowners, these sharp, bloody rates. The magical school bus mortgage will basically get off the cliff and smash itself. And then these people that are in the bus, these homeowners, these mortgage owners, will basically fall to their death. And this is basically how the media doom and gloom is painting the picture at the moment. So these homeowners will get pierced through the heart, and it will go through their body, and this is blood, blood leaking. Oh, so much blood on the streets. So here's the dilemma at the moment, right? So catch 22. You either wait for the crash and burn, which is, this experience, or break out of the fixed loan right now and refix the rate, which means taking an alternate route. Basically, their magical school bus doesn't need to go off this MC cliff. They can actually take a detour and go to Refix Street. So you might be asking, what's the rates on Refix Street if you're owner-occupier? So at the moment, Kudos Bank does 1 year fixed rate 5.19, Adelaide Bank 5.24. Again, not financial advice, but let's take on this hypothesis that you were to break your loan right now and go on Refix Street and get one of those rates. So currently, if you're on a $500,000 loan and your rate is 1.99, your current payment is $1,845.60 per month. If you were to break this loan right now and go on a 5.29% for example, 2 years, the repayment will be $2,773.42 per month. Now, this means on Refix Street, you'll be paying extra $927.82 per month. Let's apply long-term thinking. Your magical school bus decides to take a detour to Refix Street. It means that the extra repayments you'll make is $927.82 per month extra than what you'll be paying before. Say your rate expires in July, which is 6 months from February, so that times 6 is $5,566. That's a 6 months opportunity cost that you would have sacrificed from not going on the 1.99 and breaking it, but then you have that locked in for another 18 months. Or you can decide to go onto the mortgage cliff and crash and burn. So from February and up to July, if rates continue to rise, there's about 2 to 3 more rate rises, and you decide not to fix. And if rates were 7% by the time your rates expire from that 1.99 over here, the repayments on a $500,000 loan will now be $3,326.51 per month. Now, if you were to break and refix and go on Refix Street, your repayments would have been $2,773. And because you decide to not take a detour to Refix Street and really gun it to MC Street, which is crash and burn, you'll then be paying an extra $553.09 per month. Then a lot of you guys will say, hey, well, at least I'm not paying that $900 extra month, right? Yes, that's correct, but then now you're locked in for another 18 months of this fixed repayment. Whilst for now, you're paying an extra $553 on an indefinite period because we don't know when rates will go down. It might keep going up and up. I mean, if you believe in the media doom and gloom or the banks which are reporting this, there's up to 6 more interest rate rises coming. For me personally, I don't believe in the mortgage cliff doom and gloom where a lot of media people are presenting about it at the moment. I do believe there is like the Refix Street that's available for people. Then you hear people like, Mr. Mark Boris opening up to a 3rd street, which is sell your property if you can't afford it. Don't be embarrassed. Be a man. I seriously don't think rates are that high to freaking go sell your property. I mean, dude, it's like 5, 6. I've been through rates where it was 9, 10%. Like, god damn it, sell your property? What type of advice is that? And, who am I to judge him, man? I'm just a small potato. But then, guys, in summary, your magical school bus doesn't need to crash and burn over MC Street, and then you have a stake going through your heart and you're bleeding to death. You can actually consider Refix Street, and yes, the rates are a little bit higher, but then you're locking in the future at that rate for another 12 or 18 months. Otherwise, hold on to your magical school bus. Let's head towards MC Street and fingers crossed, rates don't hit 7 or 8%. So there you have it, guys. Jump in the comments. Roast me or toast me. I love to read those comments.